Hi traders, welcome to my video on the ICT Silver Bullet Indicator. You can see the indicator here on my chart. I'm using the MT4 platform. In this video, I'm going to show you how you can use the indicator to help you capture moves like this one for over 400 pips. Okay, so the Silver Bullet Indicator will basically display these kill zones, which are zones of trading activity when we can expect high liquidity or high volume, plenty of volatility in the markets, which can lead to big market moves and can be a good opportunity for us to take trades and capture some big trends. Okay, so this is my interpretation of the silver bullets and how I would use them. So the first thing I'm going to do is I'm going to trade with the trend, clear downtrend here. So what I'm going to do is I'm going to look for when there is a silver zone, and this is a time of high trading activity, which we can use as the time when we look to enter into a trade. Okay, it doesn't just mean every time you see the silver zone you must place a trade. Okay, it depends on the circumstances. So my strategy is trend trading. So the first thing to do, as we've done there, is identify the trend. Market is making lower highs here, so we're in a downtrend. Next thing to do is to time our entry. Okay, so what I'm going to do is I'm going to look to enter on breakouts of support. Okay, so lower high here. Okay, lower high here, confirmed downtrend. And then we have a level of support here and a nice breakout trade there. So this is actually a wedge pattern as well. So this would have been a good entry point. And if we zoom out, we would have been into this trend for over 350 pips. Okay, stop loss above the recent high, so only around 10 to 15 pips, which is really good considering this is a 1 hour chart. And we could have used a trailing stop as price was falling. We could have been placing our stop loss above the highs, above the high, 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 and more or less caught the majority of this move with the trailing stop. Last thing I'd want to do is have, say, a 20 pip stop loss, and then, you know, when price drops here 60 pips, get excited, exit the trade for 60 pips. Okay, not a bad trade, but you've just left all of this on the table. Okay, of course you can re-enter again, but the more you re-enter, the higher your chance of getting the entry wrong, and the more you have to pay in terms of broker fees, spreads, commissions, slippage, etc. Ideally, we want to take one good trade at the beginning and ride the trend as much as possible. Now, how does this tie in with the silver bullet? Well, I just wanted to emphasize the fact that I would not only take a trade if there was a silver zone. Okay, you can see this breakout here was not actually in a silver zone. Granted, the trading activity that caused the support was, okay, but that, even if that wasn't, I could still take this trade based on this trend and breakout. Okay, so I'm just trying to emphasize the fact that it's not, I don't think you should look for some kind of magic solution to how you will be successful at trading. That being said, the zones can be good if you are perhaps trading shorter term time frames, like let's say the 5 minute or the 15 minute, and you really want to, you know, hone in and time your entry carefully. But I would much rather capture big moves like this on the higher chart time frames, 1 hour, 4 hour, daily, weekly, and monthly. Okay, because I find moves like this are easier to spot. And certainly are, because there's more price data included. And when we can capture hundreds of pips like this with a relatively tight stop loss and less time chart watch, I'm not sure why you'd want to pull your hair out trying to scalp a few pips on the lower term chart timeframes, but each to their own. So going back to the zones, if we're using the zones for trend trading, what you can do is look for breakout when there is a silver zone. So for example here, if I can just grab that there, this nice level of support. So after that initial breakout, we had a pullback here, okay? And then we had this good level of support form here and an M chart formation as well. And then as price came here and we had the breakout, this bearish candle here, it was drawing a silver zone. Okay, so that is a good, could have been a good indication and a good time to jump in on this trade with momentum. And interestingly, this silver zone was around the London Open, and we are trading the pound dollar here, so we could have used that momentum from the London Open to hop into this breakout trade here, and we still would have had lots of pips if we zoom out available on this trend. Some may argue even you could have even drawn the support like this. Okay, we had some bearish candlestick patterns. We also had this wedge formation here, potential entry there, perhaps more aggressive, but price did form this level of resistance that was holding up quite well. We actually have a triple top formation there as well. So the triple top, the neckline, the breakout of the neckline. I do have videos on various chart formations such as triple tops you might want to check out. But that could have been a good indication just to confirm this trade here. Had you missed these initial trades again, wait for the pullback, which you have here. Draw your level of support. And interestingly, again, this breakout occurred in another silver zone. So gave you that extra oomph needed to gather momentum into a trend. Okay. Again, you don't want to sell after the rallies. Okay. Like there's a rally here. You don't want to sell at the bottom. After this rally here, you don't want to sell at this bottom here. You want to wait for the pullback and then just draw your support. Remember, we're in a downwards trend, so we're only selling. We're not taking long or buy trades. Okay, we're in a downwards trend. It's clear to see. So just sell on the breakouts of support. Okay, market's still making lower highs. You've got a nice inverted hammer there, spinning top there, hanging man, bearish hanging man pattern. There's lots of bearish candlestick formation. You've got 3 black crows. Okay, so plenty of indications this trend was going to continue. And interestingly, again, this breakout candle was drawn a silver bullet time zone, which can be good for confirmation, along with the resistance and the price just breaking out of this channel. Okay, that's actually a bearish flag pattern as well there. So all the indications were there. Okay, after this consolidation, even as far down as here in this trend, you can see we had this channel, price consolidated within this channel. Okay, bearish flag again. We know we're still in a downtrend. Market's still making lower highs, and you could have taken that breakout. There's no coincidence. There's a big breakout candle to the downside there. Traders are watching these levels and jumping in. Again, a silver zone. So plenty of momentum, and we could have been in there. Even as far down as here, just draw your support, trading with the trend, breakout there. But just be careful, zoom out, look at the overall picture, and you don't want to sell too low. Okay, you don't want to sell at the low or buy at the high. You had ample opportunities to enter this trend from when we started seeing these lower highs up here. Okay, and in fact, looks like there was even a wrong one. There was even a bull trap here. Okay, a bull trap being where that ties in perfectly with the breakout, by the way. Bull trap being where traders seen this move upwards. They bought in thinking they were gonna jump in on this new trend, this new upwards trend, but then as stop losses started getting taken out around here and the traders who were in earlier down here perhaps started taking profit, it just caused this shift of momentum to the downside. And then as we had these silver zones, things picked up and we could time our entry on a breakout there, if not earlier, depending if you're aggressive or conservative. Important thing is to have good money management as well. As I say, you don't want to have like 100 pip stop loss and a 10 pip take profit. You just, it's going to make your life much more difficult than it needs to be. But with a relatively tight stop loss, we can afford to take a few losses, 20 pips, 40 pips, 60 pips. If we have 3 losses at 20 pips for 60 pips, but we capture a big trend like this and we make 400 pips, we're going to be up over 300 pips overall. So just shows the importance of money management. Of course, trading emotions. Don't let fear, anger, and greed cloud your judgment. Okay, don't revenge trade. Don't FOMO trade. Get fear of missing out. Don't over trade. Okay. So yeah, basically trading with the how I would trade these silver zones is basically with the trend. So again, uptrend here. Okay. And then I just trade breakouts in the direction of the trend. Okay, and as I said, like I would possibly have taken this resistance breakout here, nice W chart formation, breakout to the upside. This resistance eventually becomes support, emphasizes the strength of it. I have a market making these higher lows. Okay, so I would have probably taken this breakout, and you actually have a high wave candlestick pattern there as well, breakout of the top of that. I do have videos on the various candlestick patterns you might want to check out. In fact, there was even a breakout as early as down here after this consolidation. Breakout, and then this strong level of resistance. Once we've seen that breached, would have been a good time perhaps to enter in on this this nice upwards trend. Have we taken that breakout trade? Could be looking at over 300 pips. Not bad at all. Okay, alternatively, you can wait for a pullback towards the trend line and just enter on another breakout. So pullback there, breakout. Okay, even here, this pullback, deep pullback there, and a breakout of the resistance level there. Funnily enough, that resistance comes support. No coincidence. In fact, that resistance is support here as well. So we know it's strong. Resistance comes support, comes support. So whether you entered on the breakout here or the pullback here, you're probably thinking, well, I'm not even talking about the silver zones. And again, I'm just emphasizing the fact that I will not only take a trade if it's in the silver zone. It doesn't matter. But if it is in the silver zone, like here, it can just have the extra bit of momentum just to pick up on a trend. But then you'll see instances like here, the silver zones here, but excuse me, prices you know consolidating within this zone. However, if you hone in, as I said at the start of the video, into the 5-minute and 15-minute charts, this, what we see here as consolidation on an uptrend, could be a big uptrend on the intraday chart timeframes. I just don't want to scalp or take, 10, 20 pip profit trades when we can just zoom out and capture hundreds of pips by trading less, just, trading smart, not hard. Okay, so perhaps the silver zones are more important for intraday trading. If you're looking to capture big moves like this, not 100% necessarily, in my humble opinion. There's a silver zone there, but we wouldn't have traded. We would have waited for this breakout of this resistance level here. Okay, so yeah, I think if you take anything from this video, it will be, please learn, if you don't know already, to draw trend lines, support and resistance, read price actions, and know your candlestick patterns. There's a reason that form of market analysis has been around forever, okay? And have good money management, good trading discipline, have a trading plan and stick to it, and try not to fall for like the latest, magic indicator and, unicorn trading strategies that cannot lose. But to be fair, the silver bullet zones, I do think, certainly if you're intraday trading, day trading, could be good for looking for moves, but I'd still be trading with the trend in doing that as well. For example, here, okay, we can see on this 1 hour chart, we're not going to sell after that big move down there. We would have, if anything, just waited for this pullback and then seen if price broke below this level here, which it didn't. Okay, but if you were looking at this silver zone from around this point and you've seen this big drop down, you may have just gone into the 5-minute charts, waited for a pullback and jumped in on this little downwards trend here. Okay, so there's still over 60 pips potential, but personally I'd much rather just capture a nice juicy move like this by time and entry. You're talking hundreds of pips then, so less work for bigger gains. It makes sense to me. And as I said, if you miss initial entry opportunities, you'll always get more resistance, breakout, resistance comes support. In fact, that was around the silver zone, and still plenty left in that move, over 100 pips. Okay, so hopefully you found something useful in this video. Another thing worth mentioning is these silver zones. Okay, so you've got the London Open, the New York Open, and the Asia session open. So the first few hours of each trading session is basically when the volume and liquidity is higher, so you can expect big moves. However, it does depend as well what currency pairs you're trading. As I said, this is a pound dollar, so around the London Open and especially the New York Open, because that coincides with the afternoon London session, this pair will see the most activity during those hours, whereas during the Asian session perhaps not as much. Whereas if you loaded the US dollar and Japanese yen around the Asian session, then you could probably see more activity. It just depends when you're trading. If you want to trade at night and you're in the UK and you want to trade at night, you might actually want to have a pair that's not as volatile if you're looking to scalp a range, for example. Okay, like the euro pound, for example, will tend to be quieter at night UK time, so you might just be scalping pips on that. Okay, and you can use your silver zones to tell you, okay, it's the Asian session. So now this is my zone where I can scalp a few pips within a range. You can change the colors as well on this silver bullet indicator, just so you can, you can have blue for the London session, yellow for the New York session, and purple for the Asian session, if you like. Okay, hopefully you found something useful in this video. If you can like and subscribe, that would be great. Make sure, as with any trading strategy, you always practice on a demo account to begin with. If I just want to summarize and break things down, basically trade with the trend and trade in breakouts. That's what we're doing in this strategy. I'll just give you one more quick example before we go. Clear resistance here. Okay. Support line breached. As soon as this was breached, okay, look, that support, breakout to the downside. If you were lucky, you timed the initial breakout. If you were slightly late to the party, not to worry. Nice M pattern formation, a big breakout to the downside, then that would have been a perfect entry. In fact, this support goes back as far as there. And you can see, no coincidence, we have that massive move downwards. So this would have been a good trade. Market making lower highs. Do we have our silver zone? No, see? Would you not take that breakout because it's not in a silver zone? Do you see the point I'm trying to make? Okay. All right. But again, perhaps this move here, you may have looked at the overall picture on this 1 hour chart and said, okay, the market's trending downwards. Then you may have gone to the 50-minute or the 5-minute chart and just looked for short trades in the silver zone. That may have got you into this breakout earlier. Okay. But then it may have prevented you from buying. If you were trading the 5-minute chart and you were trying to buy in this silver zone, if you came to the 1 hour and seen that the overall trend was down, you might have prevented you from actually buying. So you might have just looked for sell trades and you could have got into this big downwards trend at the ideal opportunity by timing your entry on the lower term chart time frames. Okay. Thanks for watching. Take care, and hopefully I'll catch you on the next one.